Hello and welcome. You're watching Markets Today. I'm Sakshi Batra, and on this show, I'm going to be giving you an entire wrap of the day's trading action. Well, what started off on a very high note after following a gap up opening for the Indian benchmarks, the Sensex and the Nifty, we saw a built up in the first 1 or 2 hours of trade, but soon the markets turned very, very choppy throughout the trading session. We did see a high amount of volatility, and towards the end, the markets did manage to end up in the green, but amid a high volatile session. Let's talk about the closing levels for the benchmark Sensex and the Nifty today. You did see the Sensex ending higher by 142 odd points or 0.2% at 59,744. So 59,800 reached on the lower side. And the Nifty was up by just about 66 odd points towards the close of the session, or 0.3.4% up in trade, and ended at 17,812. The good part was that the Nifty managed to stay above the 17,800 mark towards the closing of the session. Now, apart from this, we did see that about 1,910 shares did manage to advance as against 1,235 odd shares, which declined in the trade today, and 78 shares managed to stay unchanged. When we talk about the specific stocks that were the limelight in today's trading session, as far as the Nifty 50 gainers are concerned, Grasim Industries, ONGC, Hindalco, and even HDFC Life and Shree Cement, these were the top gainers of Nifty 50 in today's trading session. On the flip side, M&M, Bajaj Finserv, L&T, Bajaj Finance, and HDFC were the losers in today's trading session. On the sectoral front, when we talk about, it was the banks, the metals, the FMCG, oil and gas, that these were the indices that were up by 0.5 to 1%, while heavy sell-off was seen in the auto pack as well as capital goods and pharma that also declined in today's trading session. Now, when we talk about the broader markets, the mid cap and the small cap indices, they also managed to end up in the green, but did see a high amount of volatility throughout the trading session as well. Now, what's really making a background for the markets to be trading in this high volatility is, of course, the commentary from the US Central Bank, Federal Reserve, talking about heightened, pace of interest rate hikes coming in to fight inflation. Now, while the tightening also of the global monetary backdrop is a concern for the global equity markets, the improving corporate earnings scenario is something that is likely to lend some support to the Indian markets as well. We are going to be seeing already some small companies have started to report their earnings, like GM Breweries. We are going to see official kickstart of the earnings season on 8th of January, with the Avenue Supermarts coming out with its earnings, and then soon to be followed by the big wig heavyweight IT companies apart from this as well. Of course, there is the resilience of retail investors that have so far in the last 2 years during this entire COVID pandemic. Retail investors have stayed put and showcased their confidence in the Indian markets. Their resilience is definitely supporting the markets. The DIIs are continuously pouring in more money. Of course, we are also seeing the FIIs pour in money, but the quantum of money that the FIIs are still investing in Indian markets is still on the lower end as well. Overall, the market breadth was definitely positive today. The Nifty Bank was among the top performers or the outperformers. Now, when we talk about the kind of investors concern that there is around Omicron and the rising cases and the rising restrictions and lockdowns being announced, partial lockdowns and restrictions being announced, that is something that is weighing on the investor sentiment, as to nobody knows how worse can the situation get. The only relief being that Omicron is a very mild infection when you compare it with the other variants of COVID-19 that have preceded the Omicron virus, but it is fast spreading, and that's the big concern right now. Now, gains in oil and gas space and the financial space, IT space, and consumer shares today were offset by the auto and the healthcare segment as well. So it's just about chance by chance that what's happening in different sectors, they're taking turns to really see these buying levels happen at this point in time, but consistent sell off being happening at the IT segment sphere and the pharma space as well. But this may change with the as we approach the earnings season as well. Overall, for this entire week also, the markets have managed to shut shop with gains of 3% for the Sensex and the Nifty. The mid cap has actually ended higher by 2%. So it's the benchmarks that have led the show this time around in this entire week. As we close down this week, we are going to be keeping an eye out on the first advanced GDP numbers that will be coming out by the NSO, and the government will be releasing that. That will set the tone for the union budget, which will be presented on the 1st of Feb. And the kind of numbers that will come out, the GDP in advance estimates that will come out, that will be extrapolated, and the government will be using these figures to somehow derive at another GDP figure for FY23 in union budget that the government will be presenting. So this number will be important in that respect. Anything that you would need to know about what these GDP numbers will be indicating, for that you need to stay put with Business Today. Do like and subscribe to our YouTube channel and stay tuned, because a whole lot of news and updates around business and economic news will be following up next. Thanks a lot for tuning in, and do stay tuned on to other platforms, social platforms of Business Today like Twitter, LinkedIn, Facebook, and Instagram as well. Thanks a lot for tuning in.